please.
Yeah, thanks for joining us again. Good morning to all our YouTube viewers tuning in to Smooth 98.1 FM on Business Express. And again, our guest is Ibukun Omoyeni with Vetiva Capital. Ibukun, big news yesterday. There was, of course, the MP outcome in Nigeria. They maintained rates. Let's start with that before we get to the big news of the BDCs. Were you surprised by the outcome? And can you talk about the triggers, why the CBN or the MPC made the decision to hold all rates constant?
Okay, so at yesterday's meeting, it was widely expected that the CBN would maintain all rates constant because if you look at the two major objectives of the CBN, with respect to growth, we've seen a recovery in PMI, which is a leading indicator of economic activities in the country. And on the other hand, due to the base effect from last year's lockdown, there's going to be a stronger than usual expansion in Q2 GDP. So with that on the growth side, on the inflation side, we've seen a moderation in inflation from about April. So we've seen that moderation setting. So there's definitely no incentive to actually alter the rates because a hike in rate could actually send a negative signal to local investors who need cheaper credit to expand their businesses, while a reduction in the rate will send a negative signal to foreign investors who are looking for higher yields, considering the fact that other African environments are offering better yields than Nigeria. So basically, it was in line with our expectations.
Thank you so much, Ibukun. Okay, so let's get to the other big announcement that happened yesterday. Central Bank has said that they are going to end all FX sales to BDCs, Bureau de Change. Can you talk about the reasons why they decided to do that, and I guess what the impact will possibly be on this from this decision?
Okay, interestingly, BDCs are meant to be like a wholesale players in the FX value chain, right? And they are meant to actually improve FX supply to the populace. But the CBN has discovered that over the years, there's been an increase in the number of BDCs, as well as an increased application rate for a BDC position, right? So, but we discovered that despite the increase, there is no commensurate significant supply or significant reduction in the parallel market rate. So instead of that, we are saying those BDCs take advantage of the market by putting a lot of premium on the Naira, and that's affecting price stability, between the fact that inflation has been well above the CBN's target for over 5 years. So what the CBN is trying to do is trying to provide a better way of determining the exchange rate. Like I said, the fair value of the Naira is around 440 Naira to the dollar to 450 Naira to the dollar, right? So selling at 506 or 504 is way, that's a way undervaluation of the Naira. CBN is trying to just curtail that by ensuring it provides it to the banks. But we know that this decision would actually definitely have a negative impact in the short term, because before you try to normalize the activities with the bank, try to ensure they're able to provide this service, you will see that there will be a lot of rush to the parallel market. And mind you, there were some items, if it's one item that were banned by the CBN. What this means is that those items might not be able to access the bank, because they don't access FX through the bank. And that could lead to wider premium, because they would have to get the dollar at a more expensive rate, and that would actually affect commodities that are under that list. So it's going to be inflationary. At the same time, it's not going to affect, it's going to be negative for the parallel market rate.
What's the effect on the Naira based on this decision?
Okay, so the effect on the Naira, because the parallel market rate is collected through the rate on the street, right? Through your BDCs. Definitely that rate will have to go up, because currently the FX supply to the BDCs have been reduced, right? The only way they can get dollars is probably from individuals that already have dollars. But from the CBN, that supply source has been cut short. So definitely there'll be weakness in the parallel market, right? So between the time when this happens and the CBN ensures banks can carry out this alternative rule, there will definitely be an adverse impact there. On the other hand, we could see the CBN come back to revisit the decision if it decides to find another way to work around with the BDCs, because I actually expect the BDCs to find a way to rally around the CBN and try to bring a solution to what's currently going on. And that might probably lead to an appreciation in Naira. But again, CBN is just frowning at the huge margins that they make from the populace.
Thanks.
Ibukun, we've been here before, right? This happened back in 2016, when then, funny enough, after we came, or rather early 2017 or so, after we came out of the 2016 recession.
Definitely. But you know, in that case, there was no significant impact on the market. And that was because you had the I&E window being introduced. When that window was introduced, it actually led to a significant rise in FX supply, even at the I&E window. But currently, what we are seeing is that the turnover at the investor and exporters window is far from pre-pandemic levels, right? Foreign investors are not bringing in money as much as they used to before the pandemic struck. So that's why there's a significant reduction in FX supply. And even at that, there needs to be right management of those funds. So that's why we are having this policy in place, which could have a more adverse impact now than it had then.
Rotus, do you have any idea if this has a timeline?
It's immediate. They announced it yesterday. It's immediate.
No. What I know it's with immediate effect. But does it have a timeline? Are they going to rescind their decision at some point?
No. I mean, he made it. It's over. So no more BDC licenses, no more sales. Everything is now going to be directed through commercial banks. So, you know, as far as timeline, that's if they reverse. But I don't. The way the CBN governor sounded yesterday, he sounded like he's not going back on this. So as Ibukun just said, it's very heavily dependent. All that money they sell to BDCs, if they can channel it through the banks and you can walk. So everybody go and test this out. As we are watching us on YouTube or listening, go to your bank with your form, or hopefully they have the forms already, and tell them you need FX for some legitimate reason and see if you get it.
Yeah, and speaking of forms, I feel like this is a way that BDC wants, or rather CBN wants to track transactions, so they get the data of people. Yes.
Interesting. Oh yes, very much agreed. What else? Capital importation. Ibukun, let's quickly touch on that. So many data points out from yesterday. I think capital importation for Q2 Ibukun fell 54%, and then year on year fell 32 or 33%. Which we're talking about FX now. Less FX is coming into the country. Well, what do you make of that quickly, Ibukun?
Interesting. It's actually expected, considering the fact that there has been a lot of investors were trapped during the lockdown last year. So since then, there has been a rationing of FX such that they were not able to access FX at the rates they could before we had the various adjustments in the official value of the currency. So a lot of investors are still trying to get out of the country, although the CBN is already meeting that demand, which is why our external reserves are on the fall. But again, until the FX situation is resolved, you don't actually expect significant foreign investor interest. So majorly, if you look at the numbers, you discover that the major source of FX that was in 2020 was other investments, that is straight credit loans from parent companies, as well as other claims, right? But in 2021, what you are seeing is that portfolio investment, which is majorly investment in money market instruments, you have to consider the fact that in advanced economies, especially the UK is our top trade partner, right? When it comes to investment, right? So UK is actually an advanced economy, and many of these economies, they still have their interest rates at bottom levels. So they've not increased interest rates. So those funds are looking for places in emerging markets like Nigeria, Ghana, Kenya, in order to generate higher returns. It will surprise you to know that there are some places in the world, you can speak of Japan, where if you want to invest your money, you get less than the amount you invested because there's already surplus capital. So those capital are looking for places to actually sit. So Nigeria becomes one of those places. And because we have several money market instruments that are benchmarked to probably the treasury bill rate on the bond rate, it's more attractive for those foreign investors. That's the reason why we could see some uptick in portfolio investment. But yet, portfolio investment is still below $1 billion. And that's actually a far cry from historical sources, unless we see a bet. What investors are waiting for is, number one, CBN clears the FX backlog, the demand backlog. Then number two, there is a better determination, FX determination. That's why you see that the CBN had to adopt the NAFEX rate, which is the Investment Exporter Windows rate, as the official exchange rate. That was a bold move towards unifying the exchange rate. The only issue the CBN has had is that the parallel market rate is still far from the ironing window rate, and that's why it is taking these decisions in order to close that gap. You will see that by the time banks, CBN starts selling through FX being sold through banks, you will see a reduction in that premium between the parallel market and the ironing window. And so, with more monitoring and more tracking, that could actually improve FX supply into the economy, and I believe that's why the CBN is doing what it's doing currently.
Thank you for that. Thank you for that. Thank you for that. Val, we got messages, yeah? All right, let me read this.
Yeah.
Let me get this. Like I got this from IID. So this will affect investments in dollar-denominated assets like euro bonds and mutual funds, because it's on the ineligible list for the CBN. This will lead to significant spread in the naira. This was done in 2016 and reversed within a year. Impact significantly on inflation and cost of living. So look, thank you so much, Ibukun Omoyeni, Economist with Vetiva Capital, for taking us through the MPC decision, the ban on sale of FX to BDCs, and the capital importation numbers for Q2. It's very, very interesting times here in Africa's largest economy. Ibukun, thank you so much. Really appreciate your time.
Thank you.